Positivity all round, commodity prices doing well, copper rebounding. We've got the dollar on the back foot at this point. UK CPI surprised to the upside, and in South Africa we've had Fitch upgrading its outlook for the country as well. So good news all round, it seems, this Tuesday.
Yes, not too bad. I think we had good production reports. Gold production in South Africa increased by 2.5%. That's good for the gold miners. Over the last year, our gold production has been waning slightly, so that's very good. We saw Vale come in with very high numbers of iron ore production. We saw Kumba saying yesterday that their numbers could double in the amount they're going to make from their iron ore. So very positive on the resource front for South Africa, and that Fitch upgrade of South Africa from negative to stable is very good as well. It gives stability to the rand, and it gives investors confidence to invest in South Africa. And we see also that we're getting a nice flow of foreign funds coming back into the equity market.
What about the bond market? We've heard news that we've seen an aggressive sell-off from foreigners last week to the tune of around 8 billion rand. Are we seeing this trend continue into the new week?
Yes, I think at the beginning of the year or at the end of last year, people thought that there still might be interest rate cuts. I think this view has changed to say that interest rates will now be on hold, and people are starting to take profits now on the bonds. They see that the yield's starting to move up. And they're going to cash in on some of those high prices that the bonds have had over the last year. So I think that flow will continue slightly. Whether that money comes out of South Africa totally or it goes from the bonds into equities, we'll have to wait and see. But there's a good chance that some of that money coming out of the bonds will flow into our equity markets. Yeah. So direct foreign, the flow of money won't be totally all from bonds out of South Africa, and it will flow into the equity market as well.
Sales updates from various companies. Let's start off with Clicks. Increased sales by 16.8% off a high base in the 18 weeks to the 2nd of January 2011. The brand continues to gain market share. We know that it's very much entrenched as well in the pharmaceutical business.
Yes, I think the pharmaceuticals are getting very competitive at the moment. Dis-Chem is taking a lot of that space from Clicks as well, and from a lot of the other pharmacies around. But still performed at about 6.5%, but not as good as they have been going. But a very good, solid brand on the Clicks pharmaceutical side. But I think on their normal merchandising, they had a very good increase, growing year on year. Very strong stores increased about 11% year on year. So looking very good for Clicks. 16.8% growth off a very high base is a good number for Clicks, and they're still taking market share away from other retailers. So looking really firm, but the pharmaceutical side probably could have been a little bit better.
You know, Rob, when you look at the retail space at this point, whether you're looking at cash, credit or diversified retailers such as Clicks, it seems that they're mostly fully priced. What are your sentiments with regards to buying into Clicks at these levels?
I think they are fully priced at the moment, but you got to see how they're compared to retailers around the world, and do we have growth going forward? I think we've been revised for GDP for South Africa at about 3.5%, you know, are we going to start giving out some credit? Clicks have got a very big base of clients that use their Click cards, and they also give a little bit of starting to probably give a little bit of credit as well. So I think you can still buy the retailers in the short term. I think we're going to have food inflation going forward. That food inflation is going to help the food retailers as well, and I think that the banks are starting to lend a little bit more credit out, so the credit retailers. So I'll stay probably away, fully priced on the cash retailers. I'll probably start looking at the credit retailers, and later in the year start to look at the food retailers.
And what about beer, Rob? Looking at SAB, a 3% rise in quarterly volumes, growth in Africa and Asia offsetting the problems due to rains in Colombia. Also Europe was quite a surprise. They expected a negative number, and in fact it remained flat.
Yeah, it's a good production report from South African breweries. Market was expecting an increase of about 1.6. It came in at 3%. Very good growth in Asia and Africa. South Africa grew 3% as well in the lager volumes, mainly by Castle Light and Castle Lager. So some of the old brands coming back to the fore there for South African breweries, and looking really solid. I think America is still a problem. South America was due to a lot of rain in Colombia and floods, so I think South America pushed the numbers down slightly, but I think going forward those numbers will be quite good again. So they're looking like they're on a path of good growth. They've got very good assets in the emerging markets, and emerging markets are the place to be. So looking very good for SA Breweries. They're up about 2.5% today on that trading note.